What's up, my good people? Today, getting closer to the weekend. What's going on, everybody? If you're stopping by the channel for the first time, go ahead and hit that like button for me, and go ahead and subscribe if you haven't. That way, you can get updated when I release new videos of the sort. Also, if you're interested in being around other like-minded traders, I'm building up this Discord channel. Go ahead and click the link in the description for the Discord and go ahead and join the community that we are building up. It is in the infancy, but it's have big plans for it rounding out the year. It's going to be a big and exciting place for you guys to come and share your ideas and to learn how to day trade and trade these markets. Also, if you're interested in learning, getting a little insight in how to day trade, I got a book here on Amazon. You can go down in the link in the description, and that way you can get yourself educated. And if you get the book and you let me know that you got it, I will personally give you a helping hand on it in the Discord, free of charge. If you go through the book, you get to talk to the author here. All right, so without further ado, let's get right into it. So, as you all may know, or those who may not, the government is open for business again. Okay, so now everything is back in the saddle. It's going to take a little time to get everything, back adjusted. Now, there is some questions about the economic data and when or if they will ever bring that back. CPI, non-farm payroll, and things of that nature. So but because of the shutdown, that was discontinued. So you didn't have any way of knowing what the economic data was other than ADP, payroll um, release. That was from ADP. But now that the government is open, everything is back until January. Now they have another meeting at the end of January, so keep an eye on that. That's going to be another interesting time. But for now, let's take it for what it is at the moment. So markets dropping big today, and a lot of people's wondering what's going to happen next. Well, I'm here to show you from a technical standpoint what I'm seeing. We got a 14-year trader here. I'm mainly a day trader. I swing trade on the side, but day trading is my passion. So I'm going to give you an analysis here, quick analysis of the market, so you know kind of how to tackle it, possibly moving forward. All right, so the SPY today, as you can see, it is down pretty big on the day, 1.48%. Pretty solid down day. But if you look as a whole, it's down currently 4% on the 4% total from its highs. Let's take a look at the QQQ, and then I'm going to break it down once I show you guys the charts. So QQQ, everything is kind of making this mark right now. Okay. And in Q, all of those they pretty much run adjacent. One the set is futures, which is NQ and ES. That's the futures version, but then the QQQ in the SPY is the ETF. So you're kind of looking at one and the same, but just on a different scale. All right, so let's get back to it. Let me just run over the chart real quick with you and show you what to look for coming up here. So you got the fall off here. A lot of people's panicking and whatnot, but I'm here to show you something, right? I wouldn't panic. As of right now, this is still a great buying opportunity, and I'm going to explain to you now. This is not a true sell-off. Yes, you have the daily low. You have this big move today. That's going to make a lot of people panic, but this is what I'm seeing. So take a look. If you look down here, oops, let me try to highlight that or make it another color or something like that, where you can see it a little better. All right, hopefully you can see that purple, 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 purple. All right, let's see. 1 second. Yeah, okay, so if you look at the volume here, compared to its average and compared to the some of the highest points lately, you'll see that it's still underwhelming when it comes to the volume. Now let's go out to the weekly and let me show you something. Look at this weekly volume. Yes, you see the stocks, the market is going down, but take a look at this. I'm gonna show you. If you look, well, actually, let me do this. If you look, you got decreasing sell pressure, decreasing. So this is not a true sell-off. And we do got one. We got 2 more days in a week. So yeah, obviously this will grow a little bit. This current weekly it has time to grow. So you got 2 more days for that. So let's just say it does come up to here. It comes up, around this area or something like that. Somewhere around here. Let me mark it up hypothetically. You know, somewhere around here, right? Let's say it does come there. Now I want you to see something here. Now if you see, it would be around average volume, but it's not. That's if it even gets up here. But if it does get up here, it's not alarming volume. If you take a look at this area here on the chart, this was back in February of this year, all the way through that April deal with the Liberation Day, right? I want you to see the volume and how it picks up. That was a true sell-off. So if you compare that to this over here, this is not a true sell-off. So what you have is just basically a good pullback. The only time you would start to get alarmed now, that the one thing about the markets now, it is dynamic. So at any time things can change. Is what I'm trying to say. So yeah, right now, everything's looking like it's looking, but then at any moment now, if the volume starts to ramp up, that's when you would look at it a little differently. But at the moment, this is just a typical pullback. Now, what I want you to keep an eye on is this right here. So right now you got the markets falling. I would keep an eye. It is still in a heavy uptrend. It is pulling back. You got the 50 moving average here at 668 area, and you got this trend line here around the 665 area, 664, 65. So what I would be watching is a reaction around this area right here. Once price gets in this area, this is gonna be the make or break point. Put it that way. This is the make or break point. It's not. This is the line in the sand. So it can go either way. But once it gets to the 665, 668 area around here, this is where you want to look for an opportunity. Either way, buying or selling. Obviously, the market is in a full uptrend, so the thesis and the probability is to the upside based on sentiment, overall sentiment. But just keep an eye on this level here, okay? And let me go to the QQQ and take a look. All right, you got the same deal here. Pretty much the same deal. So you got around this 60, basically around the 600 area. Give or take, it's going to be anywhere between 605 ish to 600. This is going to be a key area. So what I would be looking for is rejection. Do you see how this happened right here? Let me show you. You see how this happened here? It showed you clear rejection, and then after that, what did it do? It gapped up the very next day. Actually, it gapped up huge. If you look here, it actually gapped up from like what it closed at 609.74, and it opened at 618.92. So like a $9 gap up. Yeah, I mean, so that's what I'm going to be looking for. Now, if it decides to get under, if it decides to get under here and then retest it, and I would look for a down entry, right? So you got two scenarios, but the fate more likely is a bounce back up, right? So that's what we got there on the. So if anybody's looking and wondering like, hey, what to do next? What do I do? Like the market's selling off. Oh, the sky's falling, and and all of that. Well, I'm here to tell you, you got some defense here. You got a line of defense right here. Now, what happens there? Now, if it breaks that, watch out. But you do have some kind of a small safety net. It's like, you're jumping off of a building or jumping off of a high surface, and you got somebody holding, holding out some sheets for you, or either you got a mattress or something laying there. You got that to help you stop your fall. Now, if you're a little too heavy, or whatever's falling is too heavy, it could break through that safety net. So we'll see. Give it a couple days. All right, so moving on. Disney, we got Disney. I'm gonna stop in real quick. Disney, they actually did pretty good, but the thing is the overall market is down, so everything is gonna be down, no matter how you slice it. Everything is gonna be down. But overall, Disney report 19% year-over-year increase in adjusted EPS, earnings per share. They have their forward guidance is looking good. In fact, a stock's guidance is good when they offer a share buyback. But they said it's not in stone, but they are planning to buy back shares next year, $7 billion worth. So that alone tells you the strength of the company, regardless of what's happening with the sell off here, regardless of it did miss the estimates by a hair. It missed the earnings estimate by a hair. I think they made $22.46 billion in quarter four, but the estimate was just over that, 22.76. They had 22.4. Estimate was 22.7. So I never really got into that whole estimate thing unless the numbers are way off. If the numbers are close, yeah, it may have an overreaction like it's doing now. But I don't really. I'm gonna be honest with you. I hear so many people say, "Oh, they missed earnings, they missed the estimate, and all this other stuff." But I mean, if it's just by a little bit, well, it's not a little bit because it's by like a couple hundred million. But you know what I mean? Like in the grand scheme of the scale that they're on, it's not by much. But like I said, the thing that stood out to me is that, and they're also increasing dividend. They're going to increase the dividend. They're going to pay out $1.50 per share, paid in two installments of 75 cents a share. So they're increasing their dividend. So any company that increasing dividend, they got money. That's just the long and short of it. And in fact, take a look at it here. You can see the 75-cent dividend here on the chart. It was 50 cents. It was 50 cents. Now it's going to be two installments of 75 cents. You see what I'm saying? So you can say what you want, or you can read into whatever, but two things that really stand out in a company's earning is if they're willing to pay higher dividends and buy back stocks. That's like the best thing you can look for. So anyway, looking at the chart wise, I mean, from a technical standpoint, you can see what happened here. You had this head and shoulders, which is, and then it broke down from that. So but that's from a technical front, and that's why we say technicals do work. They play a huge part in a lot of things. Now, on their own, they could not be as reliable as if you pair it with other things. You pair it with news. You pair it with fundamentals and such. Let me see something here. Yeah. So that was from a technical front, but it gapped down. But guess what? It's recovered already nicely. It's recovered half of it at this point. But it's something to keep an eye on. So now, from looking forward, moving forward, right? What I would be looking for on Disney is, let's see here. So we are under the 200 moving day average. So that's a pretty big psychological level that is respected by algorithms and institutions and such. So that's going to be the area of play. This 110 area. If it can get back up around here, you definitely want to keep an eye on that to see if it holds above. You look for an entry to the long side. If it gets up here and starts rejecting, it may have a little downside to go. It did fill this gap right here, and so it may be ready to go ahead and go on up. I don't see it coming down to this 100, but anything is possible. Anything is possible. Don't hold me to it. There's a lot of gaps to fill here. There is a lot of gaps to fill. Well, fill this one. You got this one right here. It could come to this 103, and then the next one would be 93. So I mean, I doubt it's coming down to 93, but it could hit this 103. It's very possible. It's all dependent to me on the market. But I already told you I don't. I'm looking at from the technical standpoint. The market is just in it's panic mode, but it's not going too much further down. That's from a technical standpoint. Okay. Let's see, and then yeah, moving forward, like I said, this 200 is the area. Right now, we are in extreme fear. Let me show you. We are in extreme fear as of November 13th. That's today. And so, when you usually have a lot of fear in the markets, when you usually have a lot of fear, that's usually the best time to buy. Honestly, especially when it's in extreme fear. When it's in the fear, that's okay. But when it gets into this level, that's when you want to really start to look for some good buying opportunities. That's all I got for today.